Good afternoon. Dan Fitzpatrick here, stockmarketmentor.com. And look, I just want to make a couple of quick comments about the market. I'm kind of talked out. I held a training session this morning for members. It was about an hour and a half long. So I think everything I had to say has been said, but new audience, new video, fits in five, got to go. So for 2 days, we've had a pretty significant rally. S&P, or I should say the Qs, opened up here. And so in 2 days, they've ramped up 5.5%. That's a pretty big move. When we look at, and that's all I can really do is just say that's a big move. I have no idea what's going to happen next, but I can tell you where we are right now. On the weekly chart, you'll see this, a nice drift higher along the 50-day or the 10-week moving average. We finally got, what I would say is a shot across the bow. It's a phrase that I use for the first break in a market that recovers. How much it recovers, if it amounts to anything, I don't know. Right now it's still just a broken market. But if we kind of wind up back into this, back into this phase where the market holds up above here, then you're going to be tempted to say, oh man, everything's fine. Everything, it's like, what is it? Everything is beautiful in its own way. And we're back up here. But the fact is, we're really not quite. But this is a tradable rally. It is. It has been, I should say. This is the point that I want to make, though. When you see like the NASDAQ doing something like this, is one of the things that I was mentioning to members today. You have to look at the big dogs and see what they're doing. And because most of these indexes, the higher the capitalization of a holding is, the more impact it has on the index. And so I'm looking at this, and that's not necessarily always the case. Some of them are just evenly weighted. But in the NASDAQ 100, you got to look at the highest capitalization stocks, because those can be the ones that will move the market the most, and they can give you an outsized indication of what's really happening underneath. Now, today, if you look at this, again, 100 stocks, sorted in order of performance today. Nice to be in PDD. We have, we'll kind of end it here. So we've got 88% that are above, that closed higher on the day. That's a pretty broad-based rally. Now, if we look at these in terms of capitalization, what we want to see, like let's say it wasn't a broad-based rally. Then I'm looking at this same chart and I'm going, okay, what's Apple doing? Okay, nice move. Nothing wrong with this. Couldn't buy it here, but if I owned it, I wouldn't think about selling it. Microsoft still has a lot of resistance overhead, but this is a clean bounce off the 200-day or 40-week moving average. We look at Google, Evilco, a breakdown here below the 2. Now it's back to it. Could this be a top? Hard to say, but I do have a hard time believing that Google would have a big retracement just because of what they do. And so I look at this, though, and I see strength here. So I see strength in Apple, Microsoft, Google, and then how about Amazon? Now, this thing, it's like, the lumberjacks in the Amazon have been chopping at this thing for a while. But this has given us a rebound too. But where's the resistance? It's right over here. Broken support. Once broken, becomes resistance. And then finally, Facebook, or almost finally, not a $1 trillion company, but, 830 billion. I would like that. I could probably afford to take NetJets every once in a while, like to the grocery store. So this is also a stock that's coming up. It's still in a downtrend right here, but you can see this could have a little ways to go. And then finally, Tesla. Lord, I hope this runs up to 1100 because I have a pretty big call position in this, which I'm really happy about. Um, some days chicken, some days feathers. So anyway, I'm looking at these 6 stocks and I'm seeing some real strength in these. I think just as a trading call, we're probably going to go a little bit higher in the NASDAQ. Beyond that, I'm over 5 minutes. I can't talk about it. But I would not be short this market right now. I'm not saying that I think this is going to go up to new highs. I kind of doubt it, but that's not a prediction. However, when things get too pessimistic, when you think about it this way, and I'm serious about this, when you hear market analysts or market commentators talking about the geopolitical thing, in this case, it's the Russia, Ukraine, or harebrained or whatever it is over there. You hear about that. When you hear commentators talking seriously about how part of the weakness is the geopolitical situation over in Russia and the Ukraine, and are we going to go to war? What about NATO and this and that and the other thing? You know that it's time to buy, because I'll just ask the question, when is the last time a war has damaged the market more than for like a day? I mean, think about it. The first Gulf War, Kuwait, not. The second Gulf War, Bush, got to go, whatever. No, didn't impact the market. The thing in Afghanistan, no. How about when we got out of Afghanistan? Ugly but true. What did that do? Wars literally don't impact the market. Do you know why? Because money doesn't care about who's killing who. It just doesn't. I don't, with respect to how I put my money. Oh, I'm going to short Lockheed Martin. Really? The point is, when you see the news flow start to turn totally bearish to where everything's wrong with the market, this market's going to zero, when do you see those headlines start to pop up? I mean, they're always there to a certain extent. That's the wall of worry. But here's when you see those stories start to pop up. After the market has declined 10%, 15%, maybe even 20%. If it's 20%, that is officially a bear market, which means load the boat. Last time the market went down 20%, it turned out to be one hell of a buying opportunity. Same thing with the SPY. When did you hear the worst stories of all? Like the worst of the worst is happening right here. This is horrible. We are going to zero. Sell everything, short everything, make money that way. You make money when the market goes up. You make money when the market goes down. Buy Barron's. Read it, because nobody else does. And so then you get this big, massive thing here. But what happens? 1 or 2 days or a week, hope springs eternal. But if this starts rolling over again, then hope is not going to spring eternal. Hope is going to cost you a lot of money. So you need to be don't trade the headlines. Who gives a rip about the headlines? Trade what the market's doing. Pay attention to the headlines, because if you have a really, really negative headline and the market's going up, what's that telling you? It's not telling you that the market's not reading the newspaper. It's telling you that the market isn't worried the way you're worried. So if there's anything, by the way, that happens in Ukraine, just hope that your kid isn't over there. The thing that the markets are definitely concerned about are interest rate hikes. But guess what? Is there anybody out there who is not aware of the expectation that the Fed is going to hike 5 times this year? Okay, that's 125 basis points, 1.25% hike in rates. I mean, rates are up by 1.25%. You know what I'm talking about. Is there anybody that hasn't heard that? Would it be a surprise to you if the Fed raised interest rates and then raised them again? OMG, the Fed's raising interest rates. It's February. We're all going to die. Everybody already knows. They know that the Fed is going to raise interest rates. Now, how much will they raise? I have no idea. My vote doesn't matter. But I know this, the banking index is holding up. Holding up. What's really not holding up is tech. Oversold bounce, fine. Mid caps, fine. No, thank you. Small caps, no, thank you. Now, why are the mid and small caps important? I'll tell you why. Because they're the ones that need to borrow the most money. That's why they're mid and small cap stocks. Small cap companies, they need money. They need money to get to where they're not a small cap company anymore. That's just the deal. So, if their money costs them more money, they're not going to be able to get some traction. They're not going to be able to grow their business. You know, it's a spectrum thing. It's not just yes or no. It's, well, how much? It's all gray area. But that's why these stocks are falling down so much. But at some point, you're going to see these stocks start to come back up. You're going to see them start to outperform. And that is when you're going to see that the market has actually been in the process of pricing in all the interest rate hikes. They're just not, they're still kind of in the process of doing it. So all I can tell you is focus on the charts. If you focus on the charts, you are guaranteed not to get into an argument with the market. That's an argument that you can't win. The best theories have been tried by some really smart people. They always lose the argument. All right, I'll see you next time.